Hi, Eric Rice here. Just want to make sure that before you watch this video, I did make a mistake. When you make mistakes, you should certainly admit them. I don't know what happened. I had a bit of a short circuit in my brain, but the Freeport is in Texas, not in Louisiana. Just want to make sure we correct that for you before you listen. Thank you for stopping by, and I hope you enjoy the information. Thank you very much. All right, we are at 5:05. Welcome everybody to the, I don't even know what we call this. We're calling it the Rice Report, I think is what we're calling it. Thank you so much for stopping by. My name is Eric Rice. I'm the Chief Growth Officer here at King Operating. We do these once a month educational workshops to try to help as best we can to help diagnose all the things that are happening in the world. There are so many things that are happening right now, from geopolitical to sociological to social to economic news. It's almost impossible to keep up. And that's part of my job here, is to maintain some sort of a fingerprint on the market moving forward. As you'll notice, there's a different background here. We actually have moved offices across town. We're now in Addison, Texas. We're only about 4 miles away from where we used to be, but we had been in that last building for about 25 years. So it's we've been in here a week and a day. So it's been a very stressful week getting used and acclimated to the new office space. But one of the benefits of the new office space is we are actually putting a podcast studio in here. So I will be doing a daily market breakdown called the Rice Report. And it should be at least on Rumble, YouTube, and iTunes, but we're a few weeks away from that. So until then, we'll keep doing what we do once a month. I think it's important that we all keep our finger on the heartbeat, or our ear to the ground, whatever phrase you want to use, as far as what's going on around the world, because it can be very confusing. It is very confusing. There's no, it can be confusing. It is intentionally confusing. And I wanted to read something for you before we get started today to let you know kind of what you're living in, whether you recognize it or not, is what's called fifth generation warfare. Fifth generation warfare, very important thing to understand. I'm going to read the definition to you. Most people have no idea what this is. I've been talking about it for about 3 years in different online shows and things like that. We are at an impasse in humanity. That's not my opinion. That is a fact of where we are. We are in a blended economic, sociological, technological, and systematic war that doesn't, we think of war, we think of bombs and tanks. It's not necessarily the case. I'll read this for you so I get it correct. Fifth generation warfare is warfare that is conducted primarily through non-kinetic military action, such as social engineering, misinformation, cyber attacks, along with emerging technologies such as artificial intelligence and fully autonomous systems. Fifth generation warfare has been described by Daniel Abbott as a war of information and perception. And I think that accurately describes the times that we are living in right now. So for those of you who are new to this for the first time, those of you clients who've been here a few times, you'll understand that I'm just trying to, I'm going to share facts and information with you. My hope and my desire is that you take the facts and information I'm giving you and you draw your own conclusion. I hope you are not just listening to me and taking what I say as verbatim. I am not a global economist. I am just a guy in an office that pays attention to everything that I see and remembers about 90% of what I hear. And all I'm trying to do is to be able to put dots on the board so that you can connect them in whatever way you see fit. I'm not always going to be right. I'm going to be wrong as often as any other human being on planet Earth. But I will say that my track record for the last 6 months is pretty good, because all I do is look at what's happening in the world and try to determine why it's happening, and then look at if it happens, or if what I perceive will happen, what should I be doing with my portfolio, with my family, all these different things. So I've been doing this a very long time before coming to King. I think it's important that someone in the world speaks a voice of reason and just factual information and allows you to think on your own, because in a fifth generation warfare, it is a war of, let's read it again. It is a war of information and perception. So there is information that is shared quite often around the world. That's what social media and all that other good stuff is. Perception is the thing that you are being sold as a reality. And that is no more apparent than it is in the economy. Now, one of the things that I can describe to let you know that we're in a fifth generation warfare for a change in something, it could be the change in the way that our freedom is structured, the way our money is run, the way the world is run. We don't know. We're just normal people. But what we can tell at this point in time is that information is everywhere and clarity is nowhere. And that means that we need to think together, we need to share information together, and we need to figure out what the heck is actually happening in the world around us, which is possibly the hardest job that God has ever given us. So we can do this together. So today's episode, we're going to call banks, bullion, and black gold. And those are the things that we're going to go through. The banks, what they're doing to impact the economy, where that's headed, where it could be headed. I have no idea where we're going, but I have my own concept, my own opinion, which I'll happily share with you. But again, just a normal guy sitting here in a suit in an office that just loves this country and tries to serve God best he can. Bullion. I talked a while back. I think if you listened to me actually on our first episode that we did, I don't know, 4 months ago, I talked about the reasons we should all be buying gold. And since that time, I believe gold was at 1712 on the date of that episode. It's now at 2026. So if you took that advice and bought some gold, you made $500 an ounce. That's pretty good turnaround. And then we'll be talking about black gold. Super important to understand what's happening in oil, gas, liquid natural gas is a major topic. It's a major headache. And again, I don't have the answers. I don't know. I'm just going to speak to you the facts, what I see from the industry and what I perceive to be going on. I have no idea. I will also start by saying that my opinions and the statements I make here are representative of Eric Rice and not of King Operating. Although I think that most people share it, but I try to separate my own opinions from the company. I don't follow anyone. These are my opinions and mine alone. Now let's get started with banks. So first, we saw First Republic fall. We knew that was going to happen probably 4 weeks ago. I believe I talked about it in our last episode when Silicon Valley Bank fell. There's a short list, and I say short list as being somewhat humorous, if I can be. There's about 315 banks that are currently on a watch list to fall as well. Most of them are regional. Some of them are huge. So it's important that we keep an eye on banking. Now, banking is an important thing that we all use. Every one of us kind of take for granted banking, but banking by itself is a backward system. The moment that you give a bank $100, your $100 that you earned, that actually becomes their money until you claim it again. So they invest it. If you're not familiar with banking systems, if I give them $100, they go borrow 1,000 with my 100 and they invest it, hoping to make better returns than the calculation it takes to figure out when I'm going to start making withdrawals on my $100. This has always been a dangerous situation, always. And it's something that we kind of gloss over. So we saw this happen a little bit in 2008. We saw banks collapse. We saw savings and loans in the 80s collapse. We've seen this happen time and time again. And usually it's based on poor performance of an underlying portfolio. Like in 2008, most people were invested in very high risk, high yield mortgage bonds. Bankers got greedy, and they got greedy at a time where the market crashed, which means that the value of their portfolio dropped and the number of their deposits stayed the same. So they became what we call insolvent. Now, an article came out about 4 hours ago stating that about half of American banks are currently already insolvent. So before I get into the banks and what it means in the market and what we're looking at is highly unusual, number one, I think it's important to note that if you're concerned about cash, which you should be, not just from the banking institutions, but from the value of the US dollar. I have every CNBC economist that works in the mainstream media that calls me an idiot, except for the fact that everything I'm talking about is actually happening. And I don't know if it'll come to fruition. I don't know what the end result will be, but I know that me personally as a father, as a patriot of this country, I'm concerned about the value of our currency, and we all should be. That's not a fearful statement. That's not designed to drive fear. That's designed to drive logic into your mind. It's something we should all be thinking about because no one's talking about it. No one was talking about it the first time I mentioned it. No one was talking about it the second time. And now some newscasters are starting to talk about it. Matter of fact, the guy who talked about it the most on TV was Tucker Carlson, who was fired from his job, perhaps for talking about many things that they don't want you to hear, including the fact that the dollar is under attack. So it's very important that you pay attention to that. But when it comes to banks, I don't have a great solution for you. Most banks, if they're called a bank, are designed to do exactly what I just described. Me personally, I bank at a very small local credit union that doesn't even open business accounts. They only deal with retail individuals. They have no investment portfolio. They actually produce a yield. They're a credit union, so I actually get a yield on my checking account. I get interest on my checking account. It's kind of astounding to me that people haven't used that system. I've been doing it for about 12 years. So if you're scared about that, I'd look into community banks. But let's look at First Republic. First Republic is a very interesting story. So it was on the radar as soon as Silicon Valley Bank went down. First Republic was also on that radar, and it's only been escalated, and now it's in the hands of the Fed. So we're looking at things that are being called months in advance that are predictable, that are not, I'm not a genius. It's just stuff that a lot of people know, but few are talking about. When these banks collapse, what we're seeing right now is we're seeing the federal government cover deposits. So in 2008, when banks collapsed, the depositors were made whole, and the shareholders of the bank were made whole. Right now, that's not a possibility after the Dodd-Frank Act. So they are making depositors whole, and people think this is a good thing. This is a terrible thing. Banks, number one, should run themselves better. Their job is to hold our money until we need it, not necessarily to be the richest person on the block. They're using your money, my money, to make themselves richer while we have the same amount in our account. It's not really a fair system. So it's one that needs some reworking, in my opinion. Now, when it comes to First Republic, I think the thing that people are overlooking is who owns shares in First Republic. And if you really dig deep and find this out, you'll find that one of the largest, if not the largest shareholder in First Republic Bank is Citigroup. So we look at these banks, these large institutions, Citigroup, Bank of America, Wells Fargo, these huge banks, it's impenetrable. That's not the truth. If you look at the top 5 banks in this nation, they have almost $300 billion in unrealized losses as we speak. So of course, the regional banks are smaller. They don't have the deposits. And here's the weird part about this. I'll just be quite frank with you. I find it interesting that banks that have more of our money are more financially secure. Why? Because they have our money. What are they doing with that money is the major issue. And from the looks of it, First Republic being owned as a very large shareholder to Citigroup, I would start looking at Citigroup and their books and seeing what's coming next. Now, First Republic was purchased by JP Morgan, which is Jamie Dimon. I believe it's JP Morgan. I'm not going to state that because I don't know that for sure. I'm not recalling it correct. But JP Morgan's been in the news quite a bit lately for their interactions and dealings with Jeffrey Epstein. So if you think the big banks are safe right now, I would probably rethink the scenario. Cash is, I'm 46, and from the time I've been born and I've been managing money, on and off since I was 23. Cash was always the safe place. We always call it a flight to quality. When the markets are volatile and they don't make sense and you don't know what to do, you flee to quality. You go to cash where it's safe and you can get a money market account, which is backed by the FDIC. And all these bank accounts, there's this overwhelming comfort level by Americans that say, oh, I'm not worried about the banks because of FDIC. Well, let's take a look at the FDIC. Currently in the United States, there are $17.48 trillion in banker deposits, meaning banks have $17.48 trillion on their books that belong to someone else. And let's look at the FDIC. The FDIC fund, which is designed to be a backstop for depositors for accounts under $250,000, their fund for the FDIC has $128 billion. I'm going to repeat those numbers. Currently, there are over $17 trillion in deposits, and there is $128 billion available to cover defaulted deposits. This is a scenario that will not end well if it doesn't get dealt with quickly. And a lot of this has to do with the weakening power state of the United States all around the world. One of the most fascinating things that has happened lately that very few news outlets have talked about is that our own government leaked documents a couple of weeks ago, actually a little over a month ago. But when this leak occurred, it was blamed on a 21-year-old Air National Guardsman out of Massachusetts, which I find interesting because I have a lot of friends in the military that tell me you really don't have access to that type of information. So we don't know what's going on because we are in an information war. Whether you believe that or not doesn't matter to me. It's the truth. And in an information war, there's going to be people who put out the truth and people who put out lies to cover it and try to confuse everyone. That's called fifth generation warfare. And we find ourselves in this debate constantly. And I'm going to go through so many these scenarios that have just happened in the last 2 or 3 weeks. It's going to make your head spin because this is what I do every day. But the interesting thing about these leaked documents, we found out 2 major things that are really important. The first one being is that we found out that our own government knows that Russia is beating Ukraine severely in Ukraine, which is not what we hear on TV. We hear that Ukrainian fighters are, the Russians are about to give up every day. And well, that's factually not true due to leaked documents that came out of our own government that have been verified. The most interesting thing that we found out from these leaked documents, though, is the fact that when we sanctioned Russia, when we weaponized the US dollar, now I'm going to rewind history a little bit. In the 70s, we went to Saudi Arabia and said, hey, listen, you're the richest nation in this region. Everyone hates you. We will protect you, but you have to use the US dollar for all oil sales. It was a good deal. We are not protecting them anymore. They've actually signed an agreement, a peace treaty between the Sunnis and Shiites, Iran and Saudi Arabia. It has been thousands of years since they've had peace, and that was brokered by China. Saudi Arabia is now selling petroleum products, oil, liquid natural gas, and chemicals used for fertilizer to China in exchange for Chinese yuan. That's not a conspiracy theory. That's not a myth. I can show you 1,000 examples. That's already happening. But probably the strangest thing that happened that we found out from these leaked documents is the fact that there are currently, and our government knows about this, there are 32 nations that are laundering Russian oil through Saudi Arabia. So while what we did was weaponize the dollar against Russia and say, if you invade Ukraine, you can't do this, you can't do that because we control the money. Well, we found out from leaked documents of our own government that more than 30 nations are currently selling Russian oil, which is probably part of the price suppression that we've seen in the oil market. Nonetheless, it should spark in your mind that perhaps things aren't as they're telling me on television, especially when it comes to the economy. There are many different things I can go through with patriotism and religious persecution and free speech and all. There's a million other places you can go to for that. Actually, we'll be doing a podcast on those things on my own free time in the future. But for right now, the economy is the easiest place to digest that what you're being told is not what's actually happening. And this is going to be a main theme of this. And of course, we have many different dates coming up that are very important. Like tomorrow, the Federal Reserve is going to decide whether or not they raise rates. There was a 93.5% probability of a Fed raise tomorrow. That dropped from 93 to 86% today. So a lot of people are saying they won't raise rates, but I'm going to get to that in a moment because it comes down to the banking institutions. When our government is bailing out billions and billions of dollars of depositors based on the default of a bank, we are increasing exposure to inflation and higher costs for a very long time. So as we look at the inflation mounting and rising constantly, we look at the Fed raising rates to counteract that. What they're doing is, again, weaponizing the dollar and making it more expensive. They're fighting three battles right now. They have to fight inflation. They have to be able to keep rates manageable so the economy can thrive, if that's even a word we can use anymore. And the third thing, they have to maintain the dollar supremacy and price. These are three things that the Federal Reserve, that Powell has to take into account. I don't know that he'll take them into account, but if I were in charge of the Federal Reserve, I would be taking these three things into account because they all matter. If the US dollar falls, there's ramifications not just in this country, but all across the world because it is a global reserve currency. We have mounting pressure on the debt ceiling that is being negotiated in Washington. Now I want to use the term negotiated this already, but they didn't. What they did was they released a Band-Aid. So the Congress got together, they agreed on a $1.5 trillion raise in the debt ceiling. That basically covers our ability to pay payments, or does it? So right now, this year in 2023, we are, as taxpayers, this is the damnedest thing. So as taxpayers of this country, we pay back a debt that primarily goes to foreign nations through the approval of Congress. That's just how our life works, which doesn't make much sense logically, but that's the world we live in. Now, what's happening is we pay the interest on this debt. So right now, this is the best part of this. Our governmental system, if we thought of it as a business, and we're all investors on this call, if we thought of our government, call the IRS the tax collector, call them, or you call them the revenues. I love how they call it the internal revenue source when it's basically taxes. Our revenue, we have an institution in our country that collects 40% of our revenue every year. That institution is still $32 trillion in debt. That's an institution that doesn't operate smoothly. If you ran across somebody who said, hey, would you want to invest 40% of your income into this company that's 30 trillion in debt? You'd say, no way, no, thank you. But that is the world we live in. And we don't have a choice. That's the other darndest part of this thing. Now, this institution that's 31 trillion in debt after collecting 40% of our income actually is 35% short on the amount of income they've collected. So this year, our tax expectations of revenue in this country are 35% below estimate. That is kind of a good thing because people are starting to realize that they can do things like invest in oil and gas and tax advantages and not pay taxes, or they're just not paying taxes altogether because they don't believe in our government. Whatever their choice is their choice. But at the end of the day, how does that affect us? Taxes are going up. That's an absolute guarantee, is that this administration will levy new taxes and increase existing taxes as soon as possible because they aren't able to pay their bills. The $1.5 trillion raise we saw in the debt ceiling, that's going to cover, it's already gone. We owe $968 billion in interest to our own Federal Reserve. As a younger person, I didn't think anything of this. As I get older, I start thinking, why do I owe $968 billion as a taxpayer? Because we borrow all this money to go to wars and all these other things that I don't know anything about. And that's just kind of how most Americans start waking up and realizing, we probably need to get more involved in our communities and make a change. But this institution we're at right now is at a leveling point. So 968 billion of 1.5 trillion is pretty much already gone for debt payments. We just authorized another $300 million to go to Ukraine after leaked documents said that there's no way they can win the war. So you can pretty much count on that 1.5 trillion will probably be gone by next Thursday. I mean, it's just where it is. And we'll be back at this debt ceiling fight. Back to taxes. The 35% shortage in tax revenue is putting tremendous pressure on the Fed and the Treasury to be able to pay the bills, for the Treasury to pay the Fed. Right now, the best estimate, the most optimistic estimate, is that our country is going to run out of the ability to pay the Federal Reserve by June 1st. Had they gotten the other 35%, it would have only extended to July 1st. So you can see how mismanaged our government spending is. And this is something we should all take into account as investors, because eventually will come to bite us. That's just the way this whole thing works. We also have a tremendous amount of sociological issues in this country. Title 42 runs out. Currently, best estimates right now, there's 50,000 migrants lined up at the border for May 11th. That's coming up. June 1st, we'll run out of money. Again, I'm not trying to be a Debbie Downer. I'm just telling you the truth. If you find it to be downer information or shocking, don't blame me. Blame all the news networks that didn't tell you these things. They're the ones at fault, not me. Now we also have a mounting issue across the globe. On June 12th, 19 new nations are going to meet with the Brics coalition. I'll rewind it because I don't know who's been to what and who's been on what. But Brics stands for Brazil, Russia, India, China, and South Africa. They formed a coalition in 2001 with the sole purpose of going head to head with Western powers via the US dollar. 2010, they bolstered their efforts, and now they're in full effect. 19 new nations are looking to join the Brics coalition next week. 15 of them have formally applied, and 4 of them have informally applied. So if you think that the US dollar is just going to be just fine, that's totally your perspective and the way you want to think. God bless you. You still have the right to do that in a free country with the First Amendment. As for me, I'm taking this very seriously. I think this is something that the rest of the world is tired of being levied and sanctioned for disagreeing with our government. And I think that they are tired of being bullied economically by horrible politicians that may or may not have been actually elected. That's just the truth. Now we're looking at some nations in this 19 new nations in the Brics coalition. We already have major players in oil. You have right off the bat, you have China, who's a major buyer of oil. You have Brazil, who there's actually a lot of reserves there. Russia, who's a major exporter of oil. India, a major purchaser of oil. That's already baked into the Brics coalition. Now you have Saudi Arabia, huge player in oil. The UAE, Algeria, Egypt, Bahrain, and Iran are all formally applied to Brics, and they're meeting with the Brics coalition next week, in June. This is not a scary development. This is something that the world has known about for almost 22 years, and no one's taken seriously. It's probably time to start taking it a little bit more seriously from a governmental perspective, though I don't think that'll happen, because they just allowed 32 nations to launder oil against our sanctions, and there was absolutely no penalties for it. We are watching the world walk away from the dollar, and there is absolutely no intervention that's taking place from our government. If that doesn't scare you, nothing will. They're taking zero actions. This is something that we've held very strong in this nation, is our ability to be a global economic powerhouse through our global reserve currency. And this administration is doing absolutely nothing to stop people from getting rid of it. That's not my opinion. That's an actual fact. And that should definitely wake you up and scare you a little bit, but it also gives you opportunities as an investor you've never seen before. I'm going to go through those in the end, and they're not going to change. They're the same opportunities I've told you every month, because there's nothing that's hopped in that's new. Although I will say, if you listened to my advice on the VIX last time, you're probably pretty happy camper today, because it was up 19% at one point, just today. So this is kind of the battle that we're in. So that's banks. So this banking system that we're watching right now, the regional banks are being attacked. You can even look at the spider. Let me give you the exact one so you can get this information correct. The SPDR, the SPDR, the S&P Regional Banking EFT. That was down 7% today. That's a basket of run by a money manager. So this money manager's best opinion of the best regional banks in the United States. That entire EFT was down 7% today. First Republic is not where it'll end. If you look at the stock prices, when one bank falls and you watch the other banks that fall around them, it's been systematic. Even in 2008, when one falls, others lose value. The ones that lose the most value are probably the next in line to be taken over by the Fed. So that list is the top 5 banks today. PacWest lost 30%. If you're a PacWest bank, your deposits will be okay, but the bank won't be. Western Alliance was down 25%. Metropolitan Bank down 21%. Home Street Bank was down 15%, and Zion's Bank was down 10%. That's probably a pretty good watch list to look at when you're trying to find out which bank this is going to happen to next, because it's not a matter of if, it's when. Despite what our government tells you, because I have about 30 articles that are bookmarked on my computer right now from Janet Yellen, who I'm just going to leave it at that. Janet Yellen is Janet Yellen. She will lie relentlessly through her teeth and go to sleep just fine at night with all of our money in her hands. Janet Yellen has told us at least 6 times in the last 2 weeks that the banks are coming back. Not that they're okay, that they're coming back, that the economy is fine. The Biden administration has said multiple times that they've got the banking situation totally licked and they're on board. They actually said this 24 hours before First Republic was seized by the Fed. So if you think I'm joking about 5th generation warfare and being able to think critically for yourself, to look at what's happening, diagnose it on your own as an investor and think for yourself. Right now, the information around the world is all skewed because you have very reputable publishers that are putting out very unreputable information. And it's been proven time and time again. And one of the best at doing this was actually Tucker Carlson, because he had the biggest platform out there and he's no longer on TV. For the time being. I can't wait to see what happens with him. Whether you like him or not, he tells the truth, and that's important to the world. So that's banks. That's the bank part of it. So we have a list of banks in front of us with PacWest, Western Alliance, Metropolitan Bank, Home Street Bank, and Zion's Bank. I would keep a close eye on them and watch what happens with them in the next coming season, whatever that may be, the next 24 hours, next 24 days, 24 weeks. I have no idea, but something is happening in that situation as well. And let's get into Bullion. So I've talked about this for, and thank you to Jay Young, our CEO, who put out a very nice article in his newsletter. I wrote a quick article about why gold has gone up. I'd say 90% of you said it's good information. 10% of you said I'm a lunatic. That's fantastic. I appreciate those 10% of you more than you can possibly imagine. And I'll give you the same response I give the ones who buy into it. I don't know. Give it time. See how it plays out. Stay calm, stay level, see what happens next. It's the only thing you can do in this type of environment. And we did, and gold has risen. You know, it actually has almost touched its all-time high. Many banks who were bearish on gold 6 months ago are now saying 2,200, 2,500 for gold. Silver is going to be the biggest winner in the metal space because it lags behind gold. It'll run up just as much as gold, but it'll probably go up even more. You can get an ounce of silver for less than $26 right now. And by the way, silver has more uses than money. Excuse me. But speaking about money and metals, since we last talked, 3 new states have actually passed legislation deeming gold and silver as currency again. For many years in many states, they deemed gold and silver coins as memorabilia. You were taxed as memorabilia. This is Basel 1, 2, and 3. It's a much deeper conversation than we'll have today because I want to get to questions and answers. So as we go through this whole chat and try to look over and see this, feel free to put questions in Q&A. I'm here to answer questions as best I can. Again, I'm not God Almighty. I don't have the answers. I'm just a simple man trying to make a living and feed a family just like the rest of you. But I will do my best to get the information to you right now. If I don't know it, I'll certainly answer questions for you next time. We'll probably start doing these more frequently because more economic data is coming out daily. That's interesting to learn and can help all of you create a better life for your family. So I'll be happy to do that. But when we get into bullion, it's important to note, I talk about this many times, more gold has been purchased by foreign central banks, not our central bank, by foreign central banks around the world in the last 2 years and then the last 50 years combined. So if you think gold is a boring play, I will bet you dollars to donuts that gold outperforms the S&P 500 by the end of this year. because the economic data is leaning that direction. The data, not the news, the data. It's important to know. So make sure that you have, some form of precious metals holdings, that you're finding tangible, real assets. That's the important thing, is real assets, commodities are the coming future. They won't be the future of mankind in investing forever. I do believe that we'll see economic change in the coming years. That's going to revolutionize the way that money is thought of, the way the banking systems are done. I believe blockchain technology plays a huge role in that. I believe cryptocurrencies play a big role in that. But at the end of the day, it's important to have gold and silver, because I'm going to walk you through something I didn't know whether I should cover or not tonight, because it could be a little scary, but it's a theoretical approach, not even mine. This is written by professionals. That makes a lot of sense to me. So bullion on its own, gold, silver, platinum is the next thing to watch. Watch platinum. A majority of the platinum around the world is produced in South Africa. A majority of the South African platinum that has been produced has already been stockpiled and offset for a coming Brics precious metal backed currency. Believe that or not, it doesn't matter. Time will tell. I think that's coming. Doesn't mean it's right. But time will tell. Every currency trader tells me it'll never happen, but it's happening right in front of us. So we will see. Time will tell. But in the end, I would have my eyes on getting your hands on platinum if you can. Just raw 1 ounce bars. I think platinum's about $1,100 for physical platinum right now. South Africa has denoted that there's an extreme deficiency. They don't have much energy over there. South Africa is in the middle of rolling blackouts for the last 3 months. Most people don't know that. Most people don't know that right now in Paris, the Parisians are firebombing their own police because of the way that their government is being run. Most people don't know that in Canada, it's basically not a free nation anymore, because the press never talks about it. And to get into Canada, that's very important to our business moving forward. Very important. They did something that we're starting to do in this country right now, which is actually really scary. And I want to go through that because everyone should know it. But I would take a look at each of those precious metals as part of your portfolio, something to stabilize. You're not going to get rich on precious. Maybe you will. There are definitely economic conditions that would denote that precious metals would have a huge run up. But just to be cautious and safe, they're a store of wealth. They're not going to lose value. So if you have dollars, they're already losing value. It's just going to take a gradual race to the bottom. Not the bottom. I won't say that. I'm not one of those people who say the dollar is going to crash to zero. I do think the dollar is going to lose significant value over the coming years, and gold and silver will certainly appreciate if that happens. Now, getting back to the Fed. So let's look at the position that our Federal Reserve is in. This is a very tricky time, and I don't believe that I believe that they know these things, but I believe that there's an agenda in place, and I believe that rates are going to go up tomorrow. So contrary to what everyone thinks. Congress even called out to the Federal Reserve to not raise rates tomorrow and to start reducing them. Well, let me give you the scenarios. If the Fed starts to reduce rates tomorrow, here's what happens. Inflation goes back up, which is already, it hasn't come down. I've explained this in the last 3 of these things. The way that we report and monitor inflation is more outdated than just about any other economic system we have. But it's not to be trusted, because we can see with our own 2 eyes that gasoline prices are up 54% since a new administration, at least, depending on where you live. We can see the groceries cost more money, eggs, all these things. That's real inflation. I don't really listen to the government, but the governmental number will go up. And if that goes up, everything else goes up on top of it. So they lower rates, inflation goes up. The economy may be stimulated, but when you're talking about a 1/4 basis point drop, you're not going to see a massive change in the stock market. Most companies leverage themselves to the hill, and they rotate off borrowed money. So if borrowed money is cheaper, companies in the stock market are going to do great. I don't think they're going to lower them. Also, if they lower them, the first thing that happens is they weaken the US dollar. And to be honest with you, that is the one area of focus that I see them really putting their foot down on. It is the last bastion that this type of system has, is the strength of a dollar. So I don't anticipate a Fed rate going down or remaining neutral. I actually expect them to raise rates tomorrow, which is going to put more pressure on the stock market. It will. Here's the weird thing. Traditionally, when they raise rates, the dollar strengthens very visibly and very quickly. Right now, the market is seeing through these things. They're seeing through almost every governmental system we have. If you listen, I think last episode or 2 episodes ago, I talked about the importance needed of algorithmic trading. 91% of our stock and bond market is traded by algorithms that get a majority of their credible information from the government credibility agencies, which have not been credible in a long time, for at least a guaranteed 22 months. We are not seeing the real numbers. And I'm going to get into black gold in a minute, which is the last segment here. So in bullion, you have this interest rate rise. If you buy gold tomorrow and rates go up, you might lose a few bucks in your gold, but eventually rates will come down. Currency will be circulated again because we're approaching a time where we're running out of FDIC fund. We're just approaching that time. They're going to print more money. And if, God forbid, another currency is created in the next couple of years that competes with the US dollar, those dollars will be repatriated into the system as well, creating further inflation and dilution of the US dollar. This is just simple math. I'm not a genius. I went to a state school. I'm not a Harvard or Ivy Leaguer guy, just a logical thinker. Now, on the other side of things, on oil and gas, where we work every day, I think it's important to note that right now the industry is in a very cautious state of affairs, I guess is a good word. I'm trying to be as politically correct as I can because right now it's just a bit of a messed up environment. Since Biden has been in office, we have seen at least a 33% increase in cost, not just us, every driller around the country. It's more expensive. It's been obvious from day one that this administration doesn't want to work with oil and gas to create sustainable long-term energies. They want to eliminate oil and gas to create energies that will supply less than 16% of the energy needed for the world. They are playing a very dangerous political game with all of our energy. You cannot have gold and silver. You cannot have a stock market. You cannot have anything without energy. And energy right now, I'm not embarrassed or afraid to say it. It's being manipulated across the board. If I'm right, I'm right. If I'm wrong, I'm wrong. But if anyone can explain to me beyond the cookie cutter ice cream and puppy dogs mainstream media answers that has any sort of logic or gumption to it, I'd be happy to listen, and I'd be more than happy to say that I'm wrong. So I'm going to start with liquid natural gas, but it's important to note costs all across the board for drilling in the United States are up probably around 33%. Now, the Dallas Federal Reserve says 10%. I've gone through the last 4 episodes of various different whistleblowers in these local Federal Reserves that are actually telling the truth, and they lose their job in a matter of minutes. But that is kind of the world we live in. On the liquid natural gas side, since when Ukraine was invaded by Russia, natural gas went from a couple of dollars to $9. Every analyst in the country said that $6 is a pretty reasonable price for liquid natural gas over the coming 12 months. We bought into it. We believe it as well. We actually think that's the price that it should be at. But for no other reason other than the fact that every economist in the world tells me that, oh, we had it's kind of like if you've ever seen that video of the media when somebody says it was a warmer than expected winter, and then every station says warmer than expected winter. This answer is poppycock. It's a great old school phrase that I used to hear all the time. A warmer than expected winter would not drop the value of natural gas by $7 per unit. So at the same time, we're looking at these hardships being enforced by regulations, by Bureau of Land Management, all these other things in our industry. We've seen a rise of 33% in costs all across the board, supply chain issues. And then when we actually get to sell a product, we're selling it at a 78% discount to projected value. It's a very difficult time. So your support for this industry will be rewarded in the end, but it's very much needed right now, not just for your portfolio or for this company, but for the nation. In this space, we also had the Freeport in Louisiana. This is a brand new facility built and designed for the liquid natural gas companies in this country to be able to ship our gas to Louisiana and sell it overseas. Right now, as we speak, you can buy a unit of, this would be a great business because our government's in this business. You can buy liquid natural gas produced in the United States for a little over $2 a unit. And you can sell it in Europe for a little over $20 a unit. Great profit margins. We're supposed to be reaping those benefits. But mysteriously, about 9 months ago, there was an explosion. Someone blew up the Freeport. The Freeport itself was inoperational for about 6 months. It's now fully on board. We're waiting for it to become a useful vehicle for our producers. But until then, we're at the whims of thinking that a 4-degree temperature change from one winter to the other caused a $7 drop in our commodity, your commodity, our commodity. That's simple facts. Liquid natural gas also, on last Thursday, an article came out, I think it was the Wall Street Journal, don't quote me on that, talking about Europe has more than enough liquid natural gas to last forever. Prices are going to be great. That was a Thursday. On Monday, an article came out, I think on oil price, talking about how European nations need to ration natural gas because there isn't enough. I can go on with these examples forever. Today is a great example. So with recessionary fears, the price of oil went down $4 today. It will go back up. All this stuff, it's all batting average. You know, don't judge a baseball player in the first 2 months of the season. Judge him on his average at the end of the year. That's generally how averages work. But we saw a $4 drop in the price of oil today. The best explanation was fear of a recession. We're already in a recession. There shouldn't be any fear. You should have a fear of a depression. However, the things that we're looking at right now economically, we've never seen before. We've never seen competition to the US dollar in my lifetime. We have never seen global confusion and political unrest. We've never seen people in Paris throwing firebombs at their police. We've never seen nations fall because of ESG scores like Sri Lanka and Panama, who are literally ashes at this point in time because they focus so much on ESG scoring. We have never seen the amount of economical circumstances that we are facing today all at one time. We are in a period of great convergence where 10 things are converging at one time. We're used to dealing with 1 or 2 at a time. The good news is that eventually we'll get a ton of clarity, but right now that's a difficult thing. So if we look into the black gold environment, why did oil go down $4? Best guess estimate? Let's take a look. I love looking at this stuff. I'm going to do it live with you. I never do this because I generally don't have anything in front of me. I just talk. But I love to go to places like Market Watch, you know, which if Market Watch might as well be owned by Jim Cramer. If you follow Jim Cramer, anything Jim Cramer promotes, you should sell, and anything he says is going to crash, you should buy. Market Watch is pretty much the same. So we're looking at all the titles that look at oil prices today, and pretty much all of them are looking at across the board. Stocks rise on Tuesday. Kinross Gold, that's from yesterday, and today we're looking at the price of oil futures is down due to recessionary factors on whether or not the Fed will raise rates tomorrow and the banking institution. These are excuses for something larger. And if you think these games aren't played on the media, you're not paying attention. All these things that I'm talking about just in this 40 minutes that we've been talking, all these things are happening. You know, every TV station is talking about, whether boys should use a girl's bathroom or nonsensical things that don't matter, especially to investors. It's time that we all start looking into information on our own and finding independent sources that provide good info. Because in the oil market, here's exactly what's happened in the last 5 days. Articles have now, I've been telling you about the EIA, which is a US board that gives verified information on the oil industry and how they've been incorrect and how they use hyperbolic words like a massive store, a massive build. These are like 1 million or 2 million barrels of oil. I'm going to repeat this number over and over again. America uses 18.6 million barrels of oil every day, day in and day out. Now, if we look at what's happening, 5 oil producing nations are meeting with Brics, which means that the WTI, this is going to be the topic of today. The topic was going to be WTF with WTI. That was kind of the thing that we were looking at. But if we look at these things, this is an article that came out today. This is May 2nd. This came out at 3 p.m. Central Time. OPEC's April production falls. Okay, so Bloomberg did a study and saw that Iraq is down 250,000 barrels per day, and that OPEC, which is supposed to be the largest producer in the world, their production fell by 310 barrels per day. So that's, I'm not a genius, but that sounds like lack of supply. You heard this across the board from OPEC, OPEC Plus, and Russia. I've gone through this many different times. Between those conglomerates and nations, along with the United States, we're about 8 million barrels per day short of what the world needs of the 103 million barrels we use across the world every day. Those are facts. A great article came out on Zero Hedge, which is a website I'd advise you all to read. It's a great website. A lot of truth in their charts, facts. They try to back up as much as they can instead of just saying, this is bad because we think it is. They put the information in there. The gentleman named Harris Kupperman, I don't follow many people, but I follow Harris because he's been very bullish on oil, and as have I. And we couldn't figure it out. Well, what he found in the last 200 days, there's about 1 billion barrels of oil that are unaccounted for in the market. I'm going to do some more digging and find some information on that and see what the case is and pay attention to what Harris is saying as well. But certainly somebody I'd pay attention to. So what we keep hearing is that there's this lack of supply. We also, this is one thing that's true. The demand coming out of China isn't as strong as we thought it would be. And the answer is pretty simple. We've already sold them all of our SPRs, so the demand won't be instant. They have a majority of the oil we sold from the Strategic Petroleum Reserve. If it didn't go to US gasoline providers, it certainly went to China. And they have enough oil reserves right now because they've been buying Russian oil using the dollar through laundered nations. All this stuff has been happening. They've been buying Iranian oil laundered through Afghanistan. All these things have been happening, and our government has done nothing about it, or even brought up the story, or even mentioned it to all of you. So I imagine that they have some supply backed up for the next 2 or 3 months. I do expect demand out of China to increase eventually, because eventually they will run out. And there are some sanctions that are taking place there that are impacting their ability to purchase. We're also looking at the largest natural gas buyer in the world. I forget the gentleman's name, but I read an article from him yesterday. He was expecting another price in LNG. And that's what happens when something gets manipulated. Eventually it goes back to its normal state. So I do expect natural gas prices to rise. I expect oil prices to rise, despite the fact it's down $4 today, because we live in a very emotional world where every trader, every investor, every person, there's so many crazy things that are happening in the world right now that everything is a knee-jerk reaction without real thought. And not like we're any different. I mean, we all do it at home with our kids or in our portfolio or whatever it may be. But when we get to the end of this emotional state and start realizing that, hey, supply and demand are the things that count in commodities, pricing will find itself back there. Liquid natural gas has a big upside. We're very excited for the future. We're a little depressed about the past, as we should be. When prices go up 33% and the value you get from the what you just mined or pull out of the ground is 78% lower than it was when you started. It's a difficult situation to get through, but get through it we will, and get through it the market will. So we are really in a position right now where oil has such little clarity. Even Kupperman said, he goes, you know, the best information you can get on oil and gas about anything is back of the napkin, back of the envelope type information, and that certainly needs to change. One of the reasons we're in this position is because our government has shut down 2 pipelines. What pipelines do is they track drop for drop exactly how many hydrocarbons have gone through that tube. Without that type of tracking, it's pretty difficult to determine what supply and demand actually are. But as you can see behind me, it is 5:51 Central, May 2nd in Dallas. That road behind me has plenty of cars on it, and about 98% of them are run by gasoline. So when I keep hearing the drop in demand, I just don't buy into it, because I see the increase in demand every time I drive to and from work every day, and every time I take my kid to a baseball game or boxing lesson or gymnastics or whatever the kids need to do. I see more cars on the road right now than I ever have before. So I'm going to kind of wrap it up at this. I think that we are in a position right now where the oil and gas industry is absolutely primed to move forward. We know that the big firms out there, the major names out there, are out actively looking for acquisition. Tempo has really picked up in the market. I've got a great article. Maybe I'll start doing this with the team, just kind of compile the articles where I get my information and send them out to you so you know where it came from. But the deduction that I have right now is that we are in a bit of a waiting game to see what happens with Brics, to see what happens with the Fed tomorrow, to see what happens with Title 42, to see what happens with a lot of things. A long-standing saying I have in the podcast I did before I came here is stay calm, stay level, see what happens next. That's absolutely my approach to life, and it should be yours. So let me go ahead and get to Q&A. I'm not your normal person here. I do not like Zoom. I do not like these things. I see you on there, Barry, with your hand raised. I'm gonna if you want to ask a question, please feel free to ask a question. If not, no problem at all. But I have some Q&A right here for you. This question is from Bob Perro. Is there any way that eventually we talked about that one? We talked about, Richard, we got you a little bit into Freeport. Freeport's back online. I expect that to have a big impact on liquid natural gas. Right now, there's about 4 major exporters in this country that dominate the exportation of liquid natural gas, and the Freeport actually will sort of democratize that. Where's a good place to buy gold and silver, in your opinion, from Dale? Dale, there's certainly websites you can go to. I particularly don't. I go to local brokers because they're bonded. I can look up their bond and see if they're real or not. Plus, when I buy it in a local store, I can have them test it in front of me to know it's real. If you're buying gold out there in larger bars, be very wary. There are a lot of people that are making fake bars out there. So make sure that your gold and silver is tested in front of you, and then make sure you have a good repository, safe place to store it outside your home so you're not taking risk. Freeport, nope, Richard, the Freeport's in Louisiana, not in Texas. Thank you so much. Your information sure makes media lies. I don't make the media lie. They do that on their own. And I have absolutely no doubt in my mind that they're doing it, because I can see the information in front of me as they're telling me it doesn't exist. So if there are any questions, you can feel free to raise your hand. I don't know how to do that on here with the attendees. But if you want to ask a question and just have a chat, feel free. If not, we are kind of at our limit here. I wanted to keep these under an hour. There's a lot of stuff to go through every single day. This is not new information. It's information that mounts on us every day. So I am going to pick up the frequency of this every couple of weeks. So as we go through the week, as we go through an event, you know, here at King, we don't want to just be thought of as the group that does oil and gas. I mean, that's what the operational team does here. But from our side of things, on the growth side, we certainly want to be able to get as much information as we possibly can out to investors, so that you can make an edge. Whether you invest with us or not doesn't matter, but you can make a more educated decision, more informed decision for you and your family. That's what we care about at the end of the day here. We care about Americans taking care of Americans to take care of America. Somebody has to do it, and clearly our government's not. I hate to sound like that guy, but I am that guy, and I've been down long, winding roads to get to this point. I used to be the government will they're not going to take care of us. We got to do that on our own. So if there are no other new questions, Dale, yes, I'll see you at 8 o'clock. It sounds like you'll be on my webinar later tonight. If there are any questions, if you see anything along the way, we're here for a relationship. If you see something like, hey, I saw this article on oilprice.com, or I saw information on this, just feel free to email your SVP. They'll get the information to me, or you can email me direct at erice. I won't put my email. It's going to go on YouTube. I'm not going to put my email out there, but email your SVP direct, and they will get the information to me, so that every couple of weeks we can do one of these informative sessions here and make sure that we're answering the questions that you have as fast as possible, getting information to you as best we can, and as well documented as we can along the way. So for all of you who came tonight, it's pretty great. We have 45 people here. Share this out with people. Oh, I see a couple hands. Now I know how to do this. Scott Blaine, I'm going to go with you first. I'm going to unmute you as well. Mark. All right, Scott, we'll have you go first. Are you there, Scott? You guys got to unmute yourself. Mark, are you there, Mark?
I'm here. Can you hear me?
Can you all hear me?
Can you hear me, Eric?
There we go. There we go. How you doing, Mark?
Hey, I'm doing pretty good, Eric. Thank you.
Good, good.
Good.
How can I help you this evening?
I want to thank you for all you do to help us out.
My pleasure.
Quick question.
Yes, sir.
Yeah, when I get emails about you talking like this, is it okay to forward them out to my friends of mine?
Like this episode?
That's correct, right?
Oh, sure. Yeah, absolutely. Yeah, I'm as you can tell, I'm not hiding. So yeah, and again, I'm just giving factual information. I'm not making. If you really wanted my opinion right now, I'd probably scare half of you to death. So I'm not going to do that to you this evening.
All right, thanks so much. Now I do appreciate it.
You got it. Thanks, Mark. Yeah, we haven't even covered CBDCs and how, maybe we'll do that in 2 weeks. We'll go through probably more developments by then, but CBDCs are a real thing to think about, real thing to worry about, to be honest with you. And there's a pretty, in my opinion, well-defined process on how the government plans to get there, or if it's the government or whoever it is. But I think it's something we should all know. And I see you on there, Michael Amsbury. Feel free to talk. You can unmute yourself. We got talk to Mark. Good to talk to you, Mark. We got Scott and Michael, who can both unmute and ask a question, or not. Maybe hit the button accidentally. Either way, we are at 5:58 mark. I've got about 2 more minutes here before I've got to get on to my. I got to get some food before my next webinar here. But if that's all we've got today, that is awesome. Thank you so much, everybody, for coming by tonight. Again, we're going to step up the frequency of this stuff and start doing these every couple of weeks. And again, in probably the next month, we'll have a podcast coming out that you can listen to in your car or online or anywhere you'd like. It's just simple factual information. One of them will be all about the economy. The other one will probably be all about the 3 things you're not supposed to talk about, is how I run my podcast. I like to talk about politics, religion, and money. There's a reason we should talk about those together. I am a believer. I don't hide that from anyone. So I love talking about God. I think it's what we were put here to do. If you don't believe in God, that's your opinion. That's the beauty of America. But anyways, so thank you so much, everybody, for coming by. God bless you all. God bless your families. If you have any information you'd like us to go through, or anything you'd like us to study up and get information to you, again, reach out to your senior vice president, and they're going to be there waiting for you any given time. So have a good evening, everybody. We'll see you in a couple of weeks here. God bless each and every one of you. Have a good night.